In this week's crypto update, we highlight the latest developments and noteworthy events in the cryptocurrency space. From regulatory decisions and market trends to new project launches and influential voices, stay informed on the ever-evolving world of cryptocurrencies. Discover the most significant updates shaping the crypto landscape and gain insights into the current happenings driving the industry forward. Stay tuned to get a snapshot of the crypto's actuality this week. Ripple Labs achieved a significant victory in the United States District Court in the Southern District of New York on July 13. Judge Annalisa Torres ruled partially in favor of the company in a case initiated by the Securities and Exchange Commission, SEC, dating back to 2020. According to documents filed on July 13, Judge Torres granted summary judgment in favor of Ripple Labs. The ruling states that XRP, the token associated with Ripple, is not considered a security but only in the context of programmatic sales on digital asset exchanges. However, the SEC also secured its own victory as the federal judge ruled that XRP should be classified as a security when sold to institutional investors. The ruling was based on the conditions outlined in the Howey test, which is used to determine whether an asset qualifies as a security. The SEC's lawsuit aimed to compel Ripple to cease offering its XRP token, asserting that it was an unregistered security requiring additional regulation. Following the news of the court ruling, the price of XRP experienced a rapid increase from 45 cents to 61 cents within minutes. This surge represented a gain of over 25% at the time of the article's publication. The news of the court ruling and the subsequent upward movement of the XRP token has generated jubilation within the crypto community. After a span of 2 years characterized by steep price increases, inflation in the United States has reached its lowest level in over 2 years. In June, the inflation rate stood at 3%, a significant drop compared to the previous year, signaling that the Federal Reserve's efforts to raise interest rates have effectively curbed price growth throughout the economy. The government's report on Wednesday revealed a substantial decline in the inflation figure, down from a 4% annual rate in May. However, it still exceeded the Federal Reserve's target rate of 2%. Over the past 12 months, gas prices have decreased, grocery costs have risen at a slower pace, and used car prices have become more affordable. While overall prices rose by 0.2% from May to June, up from 0.1% in the previous month, the increase remained relatively mild. Some economists have suggested that if inflation continues to decelerate and the economy displays adequate signs of cooling, the anticipated increase in July could potentially be the Federal Reserve's final rate hike. In October 2021, Jacob Asset Management received approval from the Guernsey financial regulator to launch a Bitcoin exchange-traded fund, ETF. The London-based multi-asset investment platform planned to debut the ETF on the Euronext Amsterdam exchange in July 2022, making it Europe's first spot Bitcoin ETF. However, due to unforeseen market conditions caused by the collapse of the Terra ecosystem in May 2022 and the FTX collapse in November, Jacob Asset Management had to delay the listing. The asset manager explained that these events prompted them to postpone the launch, as the market environment was not favorable at that time. The Jacobi Bitcoin ETF obtained approval from the Guernsey Financial Services Commission, GFSC, to launch the Bitcoin ETF in October 2021. Despite the initial delay, The asset manager has noted a gradual shift in demand compared to the previous year, which has influenced their decision to proceed with the launch. They are currently assessing the launch and plan to announce a specific date in the near future. The Jacobi Bitcoin ETF differentiates itself from traditional crypto-backed financial instruments by being a centrally cleared product with custody supported by Fidelity Digital Assets. This is a notable departure from the typical structure of exchange-traded notes, ETNs, used for crypto-backed instruments in Europe. In a recent CNBC interview, former Securities and Exchange Commission (SEC) Chairman Jay Clayton expressed his belief that the SEC should approve spot Bitcoin exchange-traded funds (ETFs). These funds directly track the price of Bitcoin, enabling investors to buy and sell the cryptocurrency without intermediaries or custody concerns. Clayton, who headed the SEC from 2017 to 2020, acknowledged the agency's efforts in regulating the crypto space but noted that there is still room for improvement. He specifically highlighted the need for the SEC to provide more clarity and certainty regarding the approval of spot Bitcoin ETFs. The SEC has previously rejected such ETF proposals due to concerns about market manipulation, fraud, and transparency. Clayton's comments coincide with mounting pressure from the crypto industry and lawmakers for the SEC to approve spot Bitcoin ETFs, especially following the agency's approval of several futures-based Bitcoin ETFs in October. Futures-based ETFs track the price of Bitcoin futures contracts, which are derivative instruments traded on regulated exchanges and expire at a specified date. While futures-based ETFs offer exposure to Bitcoin, they also introduce additional costs and risks such as contango, rollover, and leverage. The discussion around spot Bitcoin ETFs reflects ongoing debates and efforts to develop regulated investment products that enable broader access to cryptocurrencies while addressing concerns about investor protection and market integrity. It remains to be seen how the SEC will approach the approval of spot Bitcoin ETFs and address the various considerations surrounding them. In a recent interview with CNBC, Larry Fink, the CEO of BlackRock, expressed an increasingly bullish stance on cryptocurrency as an investment. Fink stated that cryptocurrency is likely to transcend any single currency, indicating its potential for broader adoption and use. While Fink could not specifically discuss Bitcoin due to BlackRock's filing of an application for a spot market Bitcoin exchange-traded fund (ETF) with the U.S. Securities and Exchange Commission (SEC, he acknowledged that cryptocurrencies possess unique value compared to other asset classes. BlackRock, which is the world's largest asset manager with $9.5 trillion in assets under management, made headlines last month when it applied to the SEC for a spot Bitcoin ETF. This move attracted institutional investors to the cryptocurrency space, leading to increased investment and contributing to a surge in Bitcoin's price, which reached a 12-month high. Fink's positive comments about cryptocurrency reflect the evolving sentiments and growing interest in digital assets among prominent financial institutions. The pursuit of a spot Bitcoin ETF by BlackRock and the increasing institutional investment in the crypto space indicate a shifting landscape where cryptocurrencies are gaining recognition as a viable investment option.